All right, good morning or good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market's kind of done a little bit of what I discussed this morning in terms of, things are probably going to have a similar price this afternoon to what they had this morning. And that's what we're seeing. And, there's been a little up, a little down in the market. But today, the difference between the high and the low on the market today is one of the tightest, not just in days, not just in weeks, but in months. We have to go back to early October to find a day where the range between the high and the low was this tight. We did have this day right here in November that was fairly tight, but even that was bigger than what we are seeing here today. So it's one where that range between the high and the low is compressed dramatically here over the last 3 days of the week, and one where you can see today's volumes. I mean, we have an hour and 50 minutes left in the trading session. We're not even up to half of yesterday's volumes. So it is one where the volumes are kind of non-existent. The catalyst outside a few individual names, but broader market catalyst, non-existent. The market, has a few things to fear going into the weekend, but, it's one where the market's not holding its breath for too much into the weekend. Now, if you read some of the headlines, maybe U.S. President Trump and the wall, right, which is kind of garnering a lot of attention right now. And, from a U.S. political standpoint, sure deserves it. From a market standpoint, yawn. There are a few small implications, but it's not something that the market is, breathlessly waiting and saying, well, if this happens, then X, and if this happens, then Y. We have Brexit stuff happening, but, that's kind of the same thing. Not really, game-changing there. And, in general, it does look like the market is kind of pausing, waiting a little bit for earnings to start to come in. We will see those start to come in here next week. So anyway, not a lot of catalyst, not a lot of movement. We have seen Bank of America just continue to rally today. And I thought about pulling the trigger earlier, and I just said, you know what, I'm going to wait till the close. And, that's kind of backfired a little bit. We've seen Bank of America be an exception in terms of how it's moved. In fact, we are seeing, the banks in general, a little bit of an exception in how they've moved. You can see things like Morgan Stanley. This is still a very interesting setup. Risk reward off 41. And, JP Morgan down here, right here at 100, where they're probably going to end it today. Probably pin it right there at 100 here today, but very interesting risk reward off of 99 right here. The options aren't compelling enough for me to, want to jump in and, get too aggressive. Earnings are priced in, so it's not a great, delta on it. But at the same time, that cushions it if it drops a little bit too. So it just affects the risk reward more than anything. There with it, but a group that is showing a little more life than others here today. Small caps are in the green here today, all right, while the S&P is in the red. We continue to kind of see this small outperformance there by small caps. We continue to see the bullish percent index, pushing on higher. It's back up to this 40 level, which is a huge rebound. I mean, it's a monster rebound. From what it was. Just a very, very big move there with it. But bottom line, as I look at things here, and I look at the overall market, and I look at where a lot of stocks are, I think there's a pretty good chance that the market, gaps on Monday. And I don't know. I'm not going to pretend to know which direction, right? Not going to pretend to have a tool that tells me, oh, market's going to gap up or market's going to gap down. We can guess and, give the thesis for either one. But I suspect that a gap down on the market Monday gets sold pretty heavily to the tune of 30, 40, even 50 points on the S&P over the course of a few days. A gap up, I think, gets bought up to the tune of 30 to 40 points over the course of 2 to 3 days. And I really suspect that the gap on Monday will set the tone for both Monday and Tuesday until we start to get earnings here on Wednesday. And it does look like, to me, that whatever the gap is, it's likely to be chaseable. There'll be likely to be some reaction to it. It would be more of a reaction and easier to chase if there's a catalyst associated with it. And there's always potential catalyst out there. But as I kind of look at things, that's what I'm looking at. When I look at gold, which I've mentioned I want to get back into, I look at it the same way, right? I mean, gold's in its consolidation, right? And it's in its consolidation, and I happen to pick it up right here, and okay, it futzed around for a little bit, but I'm out, and all right, it's in the consolidation. It didn't have its follow through from Wednesday's action. So what's the setup here? Well, it breaks Wednesday's high, the consolidation's over, right? And so it's something where would get further confirmation on something like that. I don't have to buy into the consolidation right here. And so, I'll wait until Monday and take a closer look at it there. I did look at some VXX calls to kind of buy a little bit of volatility in terms of, buying the upside to volatility. It's something that, gonna need a big drop in the market with a big catalyst for that to happen. And I think the market's a little bit too much into compression and consolidation mode after a big drop and big pop than big new direction type of mode right here. So I decided I kind of decided against it there. I mentioned earlier today Twilio. And, this is one where if it's able to hold a little bit of gain above 98, 99 today, I want to go after it. If not, I'm concerned about, just some short-term topping. And, we've seen it not really be able to hold up. We've seen, someone like Citron Research come out, talk about Netflix today, calling for Netflix back to 300. Interesting spot here for Netflix. If you want to talk about a stock that's overbought, they don't get much more overbought than Netflix. And it's one of those where, it's overbought, right? It's overbought, but every single day it seems to get another upgrade. And so it takes that next leap higher with that upgrade. And you upgrade it again, leap higher, upgrade it again, leap higher. We've continued to see that. We've also seen that with Twitter. Now, Twitter had another upgrade here today, but has not been able to tack in again the way Netflix has. But we have seen both of these be very much darlings of the analyst community. And I think that's significant going forward. I think that matters going forward. It doesn't create a real good risk-reward entry point. It does, it makes the chance of just kind of going parabolic a little bit greater, but nothing in terms of a really good risk-reward entry point. AT&T had a real bad day on Wednesday. And really pulled back after, kind of a sizable run. And, when you look at something like AT&T and what it's doing, this is kind of what I suspect. We'll see things like Facebook and Twitter and Twilio and some of these names that have kind of gone, to this overbought condition, that they get some of this type of action that we saw on AT&T, where, it sells off pretty hard one day. Everybody looks at it and goes, wow, that's ugly. And then over the course of 2, 3, 4 days, it climbs back up to the highs, and so we'll see. We'll see kind of how that plays out. But for me, as I go into the weekend, for as much as I want to put my cash into play, I'm going to save it for Monday morning. just because I do think a gap on Monday morning is very significant, and depending on the magnitude of the gap, very playable overall. In fact, maybe more playable than any gap we've seen in the last several months in terms of just pricing. Right, in terms of pricing, probably not in terms of magnitude of expected direction, right, where we're probably not going to get a 60-point move that then has a 40-point counter move. We're not going to see that most likely, but in terms of pricing to take advantage of a 20-point move or a 30-point move, pricing that's better than what we have seen in quite some time, many months here overall. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.